All right. I'm going to start you off. I'm going to start you off with one of your favorites. I'm going to give you Jamie Dimon. Okay. First couple of quotes comes from Jamie Dimon. Jamie Dimon said a couple of interesting things. Coming into this conference, he said he's cautiously pessimistic about the U.S. economy, a spin on an old favorite. Cautiously pessimistic. All right. He said in Davos, he said asset prices are kind of inflated. He said tariffs are an economic weapon, depending on how you use it, why you use it, and stuff like that. People are arguing, is it inflationary or not inflationary? But I would put it in perspective. If it's a little inflationary, but it's good for national security, so be it. Get over it. National security trumps a little bit more inflation. What does, and this bring Davos to Tom Sosnoff, what does Tom Sosnoff think about the quote from Jamie Dimon and tariffs, which is, even if it's a little inflationary, so be it. Get over it. National security trumps a little bit more inflation.
I always appreciate Jamie Dimon quotes because he never actually says anything about anything. He always just, he's a great creator, kind of a master of the obvious guy that literally never says anything. Jamie Dimon's a fader, meaning he likes to fade whatever's happening. That's kind of his, if you're bullish in Bitcoin, he hates Bitcoin. If you're bullish in the market, he's bearish. If you think inflation's coming down, he thinks it's going up. He always fades everything. I think a little inflation is good for lots of reasons. I don't think about it for national security reasons. Like, in other words, what he's saying is that he's actually referring to tariffs. And he's saying that the tariffs are inflationary, but that's good because the tariffs by definition are better for national security.
Correct.
I mean, personally, I think that's...
So what do you think about tariffs then?
Yeah, I mean,
you have a strong opinion?
I'm a free trade guy. I'm not really a tariff fan, but listen, if you have good reason to do something, that's one thing. If you're just doing it to politicize tariffs, then I don't get it at all. So if it's just for politics and for show, if it's just a show of strength, like isolationism is not my thing. If there is a valid reason, and it's like, it's not necessarily retaliatory, but just it's a reason, there's a valid economic reason, sure, there might be a place for something. I don't.
That's a surprisingly open-minded take from Todd Sosnoff on the idea of tariffs. I thought you would totally slam this right away.
You know what, Victor? Wow. My takeaway from this, which I learned just now, is that Jamie Dimon is a fader and Tom Sosnoff is a fader, which means Jamie Dimon and Tom Sosnoff are basically the same.
No, there's a big difference between a fader and a contrarian. So a contrarian makes the bet. A fader just talks about it. Like, Jamie Dimon doesn't actually do it. He just fades whatever you say. That's his whole, like, if you've watched Jamie Dimon's interview style, he just takes the opposite side of every question. He doesn't actually do any of it. That's the difference. Like, I'll sit here and I'll trade it, whatever. Whatever I say, I'm going to trade. That's not his thing. His thing is just...
So the execution. It's the execution. The difference between a fader and a contrarian is the execution. No. You push the button.
With specifically with Jamie Dimon, he has a lot of difficulty. He's a little awkward. I don't know if he's on the spectrum, whatever, but he's awkward. So
I knew he was going to say.
So that. Jamie
as
Dimon.
As soon as he said awkward, Tony, I knew he was going to accuse him of being on the spectrum.
So I don't know if Jamie Dimon is capable of having a normal conversation. So what he does must be through, this is what he was taught by a speech coach or taught by whatever. He decides to, whatever anybody asks you, he fades that conversation. That's his whole thing. That's all he does. So don't ask me any more Jamie Dimon questions because listening to him is torture.
By the way, that's surprisingly good pattern recognition. And pattern recognition is a symptom of, well, I'm going to skip that right now. But that's wild that you picked that out. And now it's probably the only thing I'm going to recognize. Quote number one of this next individual, Larry Fink, in this little segment called Bring Davos to Tom Sosnoff. First quote from Larry Fink. I'll get a second one in here a little bit later. But the first one, I think you're going to like, and let's just give it to you. I want the SEC to rapidly approve the tokenization of bonds and stocks. And keep in mind, this is coming from Larry Fink, the person who runs BlackRock, the largest, custodian of assets in the United States for both, for retirement and everything else. Again, the quote is, I want the SEC to rapidly approve the tokenization of bonds and stocks. What say you to that, Tom Sosnoff?
I would be, now again, that is a very, very broad, the rapid tokenization of stocks and bonds is an incredibly broad statement.
Cool, but sure. The concept, though.
The concept, I want the SEC and whoever the regulatory bodies are to also support the rapid tokenization of every financial product everywhere, because I think that what it does is it opens up, it opens opportunity everywhere to everybody, and it cuts out all the grifters, all the middlemen that it essentially allows me, you, and anybody else to be whatever we want, peer to peer or institution to institution, however we want to do it. If we're comfortable, with that relationship. In other words, what it means is we don't have to do everything through large banks, through huge financial institutions, through rip-off exchanges, whatever else it is. And I think that conceptually, okay, I don't know how you pull this off, but conceptually, I'm a huge favor of tokenization of financial products. How could you not be?
I couldn't agree more.
In our business, how could you not be?
It collapses costs. It collapses the speed of execution, the speed of clearing. Let me ask you, what would you see as the downstream impacts of that? Like, in other words, one of the positives of our market is we have distributed risk, right? So you have the customer who does business with the broker, who clears through a clearing firm, who sends orders to an exchange, or sort of a separate market participant. And so there's distribution of risk. In a world where you have tokenization of stocks and bonds, there's perhaps not as much need for that distribution of risk, and therefore not as much need for so many participants. What do you see as the potential downstream impacts in a world where we actually allow tokenization of our financial world? What do you see as the second order effects of that?
There's a lot of risk. I don't see tokenization replacing listed market structure. I see tokenization opening up markets to everybody everywhere. So I don't view it as, it's not binary. The way you just described it is binary. I don't think it's binary. I think that tokenization does not mean that bonds and stocks, the way we trade them today, are going to be tokenized. What it means is that there'll be a version of like you can trade, Chinese stocks or US stocks or something else in different capacity through tokens, just like you could trade gold right now as a token. But I don't think it's going to replace the current listed market. So it's complementary to, not replacement of.
You always say that. That's part of your you're contrarian, but you always have the an optimistic take. You always have the optimistic take versus a destructive or sort of winner take all type take.
It's not when he's talking to me.
We're not going to be able to decentralize, listed markets and it's never going to happen. But it's going to complement what we already have.
Like, all right, let me give you
here. I'll give you an example. I'm sitting here right now and I'm like, and somebody tells me that, you know what? Right now in Australia, they have 7% bonds. I'm just making it up. I don't know what they do. 7% short-term rates. I'm like, oh, I like that. I'm going to do 60-day paper in Australia for 7%. But trying to do that right now, forget it. Couldn't do it in a million years. What if I could just do it on my app? Now, I'll take the Aussie dollar currency risk. I get that. But since I can negotiate that trade any way I want, with whoever I'm trading with, I might do it in dollars, I might do it in Aussie dollars, but I can still get that 7% if that's the marketplace. Mm-hmm. And there's no fees. It's instantaneous. It's like,
I mean, I get that benefit for sure.
There's no currency everything's it's just, it makes total sense, Vic. I can't see how we won't get there. Right now, you understand right now.
If nothing else for the simplicity of, like if you just bring it back to the GME situation, right? The GME situation, in part, sort of occurs because there's this clearing risk. I don't want to say it's all related to this, but the point is that there's a couple of days of settlement, and that adds risk to holding a position. This is more. It's a little bit more complicated than that, but the point is, we collapse all of that clearing risk, that settlement risk, if we're instantaneously settling these things upon the transaction or the execution themselves. It removes a ton of risk from the system, and it removes a ton of time from settlement. We've moved from 3 days to 2 days, trying to move down to 1, but this makes it instantaneous.
I mean, tokenization opens everything up to everybody. I don't see how it's bad at all.
Do you see? Okay, I can't help myself. I know I listened to your take on the Trump coin and Melania coin, but like, let me flip it. Okay, let me not go. I'm Trumped in Elon down, so I don't want to talk about those.
Okay,
guys
that's anymore. Fine. I don't want to either.
Let's go to the really smart young kid, 18 years old, super talented in whatever they do, and they want to start something, they want to raise their own business. It's hard. You got to have a ton of capital to go try to raise, or connections to go try to raise capital. Maybe launching a coin, this person's name, first name, John Doe, coin, is a way to raise capital, people to invest in that person directly. So in a way, people looked at the Trump coin, Melania coin as a grift. And I'm like, I get it. As long as you don't rug everybody, it's not really a grift, but it's a weird thing to do, stupid thing to do, in my opinion. But a world where people can sort of self-fund in these types of ways, it creates really interesting opportunities for individuals that would never be able to raise money in sort of these traditional pathways. Would you say that's true?
No.
And if that's true, you don't think that's true? No. I thought I got this from you. I thought you said this one day, that you saw a world where young kids could basically raise capital through these types of methods.
I do see a world where young kids can raise capital, but not necessarily the way you just described it. The problem with it is we tried this before and it didn't work. And the reason it didn't work is because the message of raising capital gets lost with these people were not giving them money because they didn't. I wasn't, not me, but people were not writing checks because they believed in the project that people were working on. People were writing checks because they believed that in that little Ponzi scheme idea of that underlying coin, that the speculative value of that coin would be worth something. So the purpose of investing was very misleading. And that's why it all fell apart. And that's why it got regulated out.
Fair enough.
Can't go the same route. If you want to, I'm all for people being able to raise money. Crowdsourcing, almost impossible. Raising money in traditional sense, almost impossible. And the reason that it's almost impossible is because most of those businesses fail. I mean, there's a reason it's impossible. If businesses were successful, then raising money would be a lot easier. But businesses are 95% of those startups fail. So it's really hard to raise capital because everybody knows they fail. So what you're asking is that can we create an alternative method using an initial coin offering or whatever you want to call it, and if people are willing to buy a coin, but those same people are not willing to write a check for that business. They're only willing to write a check for that coin because they think the coin has Ponzi scheme value, not real value. Okay, that's not a reason to do something. That's my point.
Fair enough. I get what you're saying. You're advocating fundamental value. You're advocating fundamental.
I like the way you changed that, but I'm not advocating fundamental value. But I am advocating that
you're making sure people understand future cash flows discounted to net present value, and you want people to focus on the income statement, the cash balance of companies.
Victor, a startup idea does not have an income statement. They do not have free cash flow. Okay, that's not what I'm focusing on. But we all know that that startups don't really make it, and you're talking about a couple of percent tops, and so you have to take that into consideration.
All right. Well, I do take that in consideration, but I do want to take this opportunity to let everyone else know that Tony and I are launching our new coin next week. It's called Vic and Tone. We'll give you the ticker. We'll give you the ticker next week, but I want everyone to be on the lookout.
It's a BATOR coin, a BATOR, BATOR coin.
That's actually a better name. See,
yeah.
I think you guys
synergy. Look at the synergy we have already. That was $1 billion conversation we just had right now.
Right there.
I mean, I don't know about a coin for you two, but Vic and Tony as a pizzeria, you got potential.
Why you got no black people on the wall, Tony? Why there's no black people on the wall? All right. Here, I'll do the last one.
You're my favorite Mookie.
I'll give you the last one. I got a bunch of them, but I don't want to go too long. But you guys let me know. Marc Benioff, when talking about OpenAI, and I'm hoping this opens up a bigger conversation for just a couple minutes. But when talking about OpenAI, so Marc Benioff, CEO of Salesforce, and competitor, obviously, of Microsoft, he was asked about OpenAI, which was previously exclusive to Azure, which is a Microsoft product. Microsoft obviously is an investor in OpenAI. OpenAI was previously exclusive to Azure, and that's not going to be exclusive anymore. They're now going to be available on other platforms. And Marc Benioff was asked what he thought about this, and he said it's extremely important for OpenAI to get to other platforms quickly because Microsoft is building their own AI. I don't think that Microsoft will use OpenAI in the future. They have their own they'll have their own frontier models. They've said it clearly, said it's expensive, hard to use, and they've made some hires to bring this type of talent in-house. And the question isn't really about what he said, whether you think it's true. It's more about having been a board member, leader and founder of a company, seeing big companies and small companies, the dog-eat-dog world of entrepreneurship. So this guy, Sam Altman, he gets money from Microsoft. Microsoft is making money from this investment. And at the same time, they're trying to effectively outcompete them, outbuild them to make their own models in-house and effectively get rid of them in a little bit of a way. And so I'm just sort of curious, how do you see a world where the company that invested in you is also trying to compete with you? How often does that occur, and how weird of a board and founder situation does that have to be?
Well, that happened with Tasty and TD Ameritrade. It happened with lots of different people that have, I mean, the company that invested in you is also competing with you is a world I'm very comfortable in. I've experienced that firsthand. But to be fair, it would be ridiculous for a company, when you're talking about certain companies now that are bigger than life, like Microsoft is a $3.5 trillion company. It's not really a company anymore. It's a thing.
It's an entity. It's a country. It's not even a country. It's like an economic zone.
It is an economic zone. It's probably one of the top 20 economic zones in the entire world. Microsoft is. I'm not sure, how could they not build their own AI? Do you know what I mean? It's not something they can even think about. It's like there are probably 10 companies around the world, maybe 8 companies, that have to have their own, basically build their own AI. They have to have the engine. Everybody else can build all the AI they want using any one of these 5, 10, however many engines there are. For the rest of us, it's good for competition. For those guys, like, we're all going to eat each other, right? Somehow, everybody's competing for the same customer. Everybody's, the competition's good. And for those 8 companies, I mean, it would be completely unrealistic for them to think, like, if your competition is if you're Salesforce, you understand that Microsoft's going to build that. If you're OpenAI, they're going to build. Like, this is not something this is not going to surprise you. It's not if, it was just when. So
the incentive structure was obvious to both sides that this was a likely path, and so it's like there's no hard feelings. It's only business. That type of situation.
Kind of that. Also thinking that if you want an industry to really explode, you have to have. So, like, if you're the only person selling hamburgers, it's not going to be a big enough business no matter what. You need 10 other people also selling hamburgers to get everybody in the world interested in eating hamburgers. So I don't necessarily think it's a bad thing that there's 5 or 10 sources for AI, and then let everybody else in the world figure out based on fees, who you're going to use.